Welcome to the Deep Dive. Today, we're tackling something that, well, it's definitely on a lot of people's minds, especially after the last few years, term insurance. I bet many of you listening have maybe started looking into it, perhaps post-COVID, thinking about uncertainty. But then you hit that wall of jargon, right? Benefits, add-ons, riders. It gets confusing fast. So yeah, our mission today is simple. Cut through that confusion. We want to make clear what these riders actually are, who really needs them, and crucially for you expats in the UAE, help you figure out where to even buy this stuff locally, back home in India maybe, and does it cover you worldwide?
Exactly. We're aiming for those aha moments today. It's not just about definitions. It's about giving you the confidence to make smart choices for your financial security, for your family. Let's get into it.
Okay, let's unpack this then. Before we get into the nitty-gritty of specific types, just basically, what is a rider in this insurance world? Why bother adding them?
Right. So think of your basic term insurance policy as like the main structure. It pays out if you pass away during the term. Simple. A rider is essentially an optional add-on, like customizing a car, You add features to the base model. These riders enhance your coverage. They give you extra benefits that aren't standard. They usually cost a bit extra, though sometimes they're surprisingly affordable. And they let you tailor that protection to your specific situation, your specific worries.
Got it. Customizing the safety net. Makes sense. Okay, let's start with what people often see, the accidental death benefit rider, ADB. Accidents are, well, unfortunately, a fact of life.
They are. And the ADB rider is pretty straightforward, but quite powerful. Simply put, if the insured person dies specifically because of an accident, this rider pays out an additional lump sum. That's on top of the main death benefit from your term policy. It's designed to give your family a really significant extra financial cushion if a tragedy like that happens unexpectedly.
So it's like doubling down if the cause is accidental. Can you give us a quick example just to see how it plays out?
Sure, yeah. Let's take someone, say Ramesh, 35, maybe living in India. He has a standard term policy for 50 lakhs. That's 5 million rupees. Now, if Ramesh adds an accidental death rider for, let's say, another 20 lakhs, and then tragically he dies in a traffic accident, his family doesn't just get the 50 lakhs, they get the 50 plus the 20 from the rider. So 70 lakhs total. That's a huge difference for a family dealing with sudden loss,
Wow, yeah. 70 lakhs versus 50, that's substantial. So what's the key thing to remember here? Or maybe a common mistake people make with this one?
I think the key is just how cost-effective it can be. It's a relatively cheap way to add a lot of extra protection for a specific high-impact kind of event. What might surprise people? Many ADB riders actually cover more than just death. Some include benefits for accidental disability, too, like if you lose a limb or your sight in an accident. That's often overlooked. The pitfall. Definitely the exclusions. People assume accident means any accident. But things like high-risk hobbies, skydiving, bungee jumping, or deaths from war, maybe criminal acts, those are usually not covered. You've really got to read that fine print.
Ah, okay. That's critical. So who should really be thinking hard about adding this ADB rider?
Well, definitely individuals whose jobs have higher accident risks, construction workers, pilots, that sort of thing, or even just people with, adventurous hobbies. But honestly, it's also for anyone just looking for an affordable way to give their family a really significant extra layer of security against that awful possibility of an accidental death or serious injury.
Okay, moving on. This next one gets, you mentioned it. It gets really interesting and causes a lot of head scratching, especially for our listeners here in the UAE. The critical illness rider, or CI rider. People often think their regular health insurance has this covered.
Yes, and that confusion is exactly what we need to clear up. It's a major point. A critical illness rider is fundamentally different. It's an add-on that pays a lump sum cash amount directly to you, the policyholder. This payout happens if you're diagnosed with one of the specific severe illnesses listed in the policy, things like cancer, heart attack, stroke, kidney failure, major organ transplant, the really serious stuff. It's a living benefit. It pays out while you're alive.
Right. Cash in your hand, not paying a hospital bill.
Yeah.
Okay. But here's the question everyone asks. If my mandatory health insurance here in the UAE is covering my treatment, my hospital stay, why do I need this extra lump sum? What's the actual point?
This is the crucial difference. Your standard health insurance is what we call indemnity-based. It pays for the medical treatments. It pays the doctors, the hospitals, usually directly. Its job is to cover the cost of getting you better. A critical illness payout, that lump sum, is for everything else. Think about it. A serious illness almost always means you can't work, right? So lost income, major income loss. Plus, there are deductibles, copays on your health plan, maybe treatments your health insurance doesn't cover, like experimental options. You might need to hire help at home, modify your house, pay for long-term rehab. The CI lump sum is there to cover those costs. It replaces lost income, covers those out-of-pocket expenses, manages daily bills like your mortgage or rent or groceries when your salary stops. It gives you breathing room.
Ah, okay. So it's not overlapping. It's filling a totally different gap, the non-medical financial fallout.
Exactly. In the UAE, that mandatory health cover is great for medical bills, but it won't replace your paycheck if you're off work for 6 months, a year, maybe longer. It won't pay for long-term care or adapting your life to a new reality. The CI rider protects your lifestyle, your family's financial stability, allowing you to actually focus on getting well without the added terror of financial ruin. That's the game changer.
That makes a huge difference in perspective. It's about protecting your whole financial life, not just paying the doctor. So who is this a must-have for then?
Honestly, almost anyone with dependents or significant financial responsibilities. If you're the main breadwinner, it's incredibly important. If your family relies on your income, or if you have a family history of conditions like cancer or heart disease, that makes it even more relevant. It's truly a benefit designed to protect you and your family while you're dealing with a major health crisis.
Okay. Now, what about situations, maybe not a critical illness as defined, but say a serious injury or a long-term health issue stops you from working? How do you protect your income stream then?
Yeah, great question. That's exactly the scenario the Disability Income Rider, the DI Rider, is designed for. This add-on provides a regular, usually monthly income if you become disabled and you just can't work. It's there to replace a portion of your lost earnings and keep your finances stable when your regular paycheck stops due to that disability. It's a really crucial safety net.
Sounds vital, especially for primary earners. What's the most important thing to grasp about how disability gets defined here? Because I imagine that's where the details really matter.
You've hit the nail on the head. That definition is absolutely key. There's a huge difference, typically, between two main types: own occupation and any occupation. Own occupation means you're considered disabled and eligible for benefits if you can't perform the main duties of your specific job. So, a surgeon with hand tremors who can no longer operate would likely qualify, even if they could, say, teach or consult. Any occupation is much stricter. It generally means you have to be unable to perform the duties of any job for which you're reasonably suited by education, training, or experience.
Ah, okay. Big difference.
Huge. If you're in a specialized or high-income profession, own occupation is usually far more valuable, though it might cost a bit more. It protects your career, your established standard of living. Settling for any occupation, if you're, say, a specialist doctor or a pilot, could mean you don't get benefits even if you can't do your main job anymore, as long as you could theoretically do something else. That's the potential pitfall.
That's a massive insight, especially for professionals listening. So who should really be prioritizing this DI rider?
Anyone whose income is the bedrock of their household finances. Definitely self-employed individuals who don't have employer-provided sick pay or disability cover. Also, people in jobs with a higher physical risk or risk of injury. Basically, if your family's financial plan depends heavily on your ability to earn, this rider deserves serious consideration.
Right. Now let's connect some dots. Imagine the worst happens. You are disabled, your income has dropped or stopped, and now even paying your insurance premiums feels like a burden. Is there something for that specific stress?
Yes, thankfully. And it's a really clever bit of protection. It's called the Waiver of Premium Rider, or WOP. What this does is, if you become totally disabled, according to the policy's definition, usually for a set period like 6 months and you can't work, the insurance company essentially says, okay, you don't have to pay your life insurance premiums anymore, but we'll keep your policy fully active. And importantly, those premiums that are waived, you generally don't have to pay them back later.
Wow. So it's literally insurance for your insurance payments. What's the core value proposition there? Why is that so important?
The core value is preventing a bad situation from cascading into something worse. Disability often means a drastic income reduction, right? The absolute last thing you need then is to lose your essential life insurance coverage because you simply can't afford to keep paying for it. The WOP rider removes that specific worry. It guarantees your family's long-term financial protection. The life insurance payout remains secure, even if you're facing long-term disability and reduced income. It takes a potential future burden off the table.
Can you give a quick sense of the cost versus benefit?
Sure. It varies, of course, but let's say a 35-year-old adds a WOP rider for maybe, I don't know, $60 a year. Seems small. But if they become disabled at age 45 and can't work until they're 60, and their annual life insurance premium was, say, $2,000, that rider, costing them $600 over the 10 years before disability, just saved them $30,000 in premium payments, 15 years x $2,000. That's significant leverage and peace of mind for a relatively small ongoing cost.
That really puts it into perspective. It's a small cost for potentially huge savings and security later. Who needs this WOP rider most, would you say?
It's particularly valuable for single-income families, where losing that income and the insurance would be catastrophic. Also, people in high-risk jobs again, anyone with limited emergency savings, or maybe a family history of disabling conditions. And honestly, it's often cheaper the younger and healthier you are when you add it, so getting it early locks in that protection at a lower cost. Just remember the key difference. WOP waives premiums. It saves you money. Disability income pays you money. They work together. They don't replace each other.
Got it. Complementary tools.
Yeah.
Okay, we've covered the really big, impactful riders. Are there any others worth a quick mention, maybe something people overlook for future planning?
Yeah, there are others, like child riders or return of premium, but one I think is particularly smart for long-term thinking is the Guaranteed Insurability Rider. This one basically gives you the right to buy additional life insurance coverage at specific points in the future, like when you get married, have a child, buy a house without having to go through medical checks again. So even if your health gets worse later in life, you can still increase your coverage based on your needs then. It's a great way to future-proof your insurability.
That is clever. Locking in the option to get more coverage later, regardless of health. Okay, let's pull all this together. We've talked about what these riders do. Now, the big practical question for many listeners, especially expats in the UAE, where should you actually buy this term insurance? Local company here, or back home, say, in India? And how does worldwide coverage fit in?
Right. This is a really common and important question for expats. There's no single right answer. It depends on your situation. But maybe think about it using these 3 questions. 1, where do your main beneficiaries, your family, actually live? If they're back in India, having a policy with an Indian insurer might make the claim process potentially smoother for them down the road. If your family is here with you in the UAE, a local policy might be simpler to manage.
Okay, that makes sense. Proximity of beneficiaries. What's next?
2, what are your long-term plans? Are you planning to stay in the UAE indefinitely? Then a policy from a stable, locally regulated provider might make sense. Or do you see yourself moving back home eventually, or maybe even to another country? In that case, a policy from your home country designed for NRIs, or perhaps from a large international insurer with a global presence, might offer more portability or continuity.
Residency plans, got it.
Yeah.
And the third question?
Third is really about comfort with the regulatory environment. In the UAE, you have established international companies, like Friends Provident International, for instance, who are regulated by the UAE Central Bank, offering plans specifically for residents here. Back in India, you have major players like Tata, AIA, LIC, HDFC Life, Max Life, offering specific NRI term insurance products under Indian insurance regulations, IRDAI. Both systems offer protections. It's about which framework you and potentially your beneficiaries feel more comfortable navigating.
Okay, so beneficiary location, residency plans, and regulatory comfort. That's a really helpful framework. Now, what about the worldwide coverage aspect? If I buy a policy in India or the UAE, am I covered if something happens while I'm on holiday in, say, Europe?
Generally speaking, yes. For the core death benefit of a standard term life insurance policy, the fundamental principle is that it pays out upon the insured's death, regardless of where in the world the death occurs. Unless the policy has very specific, clearly stated exclusions, the payout should be global.
Okay, so the base coverage is usually worldwide.
Usually, but, and this is a big but, you absolutely must check the details for the riders, especially things like the accidental death benefit rider. Some ADB riders, for example, might have geographical exclusions or exclusions related to specific activities often tied to location, like acts of war or terrorism. So, while the main death benefit might be fine, the extra payout from the rider could potentially be denied, depending on where or how the accidental death occurred.
So the add-ons might have limits the base policy doesn't.
Exactly. The devil is always in the detail with insurance. So the takeaway is, assume the base death benefit is likely global, but diligently verify the worldwide applicability and any specific exclusions for every single rider you're considering or already have. Ask the insurer directly, get it in writing if possible. Don't make assumptions.
That's incredibly important advice. Check every rider's terms for global coverage. Okay, this has been a fantastic deep dive. It really highlights how understanding these riders isn't just about ticking boxes, it's about strategically building a safety net that truly reflects your life's risks, accidents, illness, disability. Even just ensuring your policy stays active if times get tough. Our goal here, as always, is to give you the insights to make those informed choices that really contribute to your financial well-being and peace of mind. So the question we want to leave you with today is this. Look at your own situation, your family, your financial goals. Are your current insurance policies genuinely aligned with all those potential life events? Or are there gaps, perhaps, that some of these riders we discussed could effectively fill? Maybe use this conversation as a prompt. Review what you have. Think about what you need. And perhaps consider chatting with a qualified financial advisor to really tailor your protection properly. And please do subscribe to the InvestMoneyUAE channel for more deep dives like this on personal finance, wealth planning, retirement, kids education planning, all of it. We'll be back soon with another one.